Okay, now we begin with 18.7. The requirement is to compute for the book value per preference share and per ordinary share on December 31, 2021. The authorized capital of 20,000 shares, 100 par, 8% cumulative preference shares, and 40,000 ordinary shares with 100 par value. The entity reported the following shareholders' equity on December 31, 2021. So we have now cumulative preference share capital, ordinary share capital, share premium, retained earnings, and treasury shares at cost of 300,000. So the net stockholders or shareholders equity is 3,820,000. Dividends on preference share are in arrears for 2 years, including the current year. So now we have the computation as per requirement. First, we compute for the total shareholders equity of 3,820,000 less preference shareholders equity, the capital of 1 million, and the preference dividends at 8% multiplied by 1 million and times 2. That's the dividends in arrears in number of years. So we now get 1,160,000 and the difference of 2,660,000. That's the ordinary shareholders equity. So now computing for the book value per preference share, 1,160,000. That's your shareholders equity for preference shares. So we have 1,160,000 divided by the number of preference shares. That's for 1 million. And we have the par 100. So we have 10,000 shares. Book value per share is 116. Now for the ordinary, the book value is 2,660,000 divided by 20,000 shares. And we have the book value per share equal to 133. Now, for the ordinary shares issued of 22,000 and for the treasury shares of 2,000. Now, take note that given above, we have the ordinary shares of 40,000. However, based on the ordinary share capital of 2.2 million, only 20,000 shares were issued. So meaning the remainder remained unissued. And we have the treasury shares for 2,000 shares. So the outstanding ordinary shares is 20,000. And by the way, when we talk about outstanding shares, we are referring to the shares in the hands of the shareholders. They are the shares which are entitled to dividends. So your treasury shares are not in the hands of the shareholders because we have the shares reacquired by the corporation either through purchase or donation. We are referring to the treasury shares. And since the treasury shares are not in the hands of the shareholders, meaning they are not outstanding, so they are not entitled to dividends. Next, we go to problem 8. Requirement is to compute for the book value per preference and per ordinary share. So we have the ordinary shares issued of 20,000 shares, subscribe of 10,000. The total is 30,000, and we have the amounts at their par values. We deduct the treasury shares of 5,000 for the ordinary, and the outstanding shares. Ordinary is 25,000 for the par of 2.5 million. The share premium of 300,000 plus the 100,000 shares gain on treasury shares. So for a total of 400,000 share premium. And we have the total excess after adding retained earnings of 2,040,000. The excess over par on the ordinary shares is 2,440,000. Now for the balances, we have the excess of 2,440,000 or the ordinary shares, and the preference of 1.5 million. So the ordinary of 2.5 million. Now for 12% multiplied by 1.5 million times 3 years in arrears, and for 540,000 deducted from excess, it will be added to the preference shares, and 12% times 2.5 million on ordinary shares. So 300,000 extended to the ordinary shares column. So the balance for participation is 1.6 million. 15 over 40 multiplied by the balance. So 15, that's 1.5 million for preference, and the total of 40 is by adding 1.5 million and 2.5 million. So that's 4 million. We eliminate the zeros. That's why we have 15 over 40 multiplied by the excess to be given to the preference shares, 600,000, and to the ordinary shares of 1 million. For the total of preference shares, divided by the number of shares outstanding, the same with the ordinary. So the book value per share on the preference is 176 per share, and for the ordinary preference is 176 pesos per share, and ordinary is 152 pesos per share. Now these are the book values of both shares. Now we have take note that the basis of giving the dividends are the outstanding shares. So the outstanding shares are in the hands of the stockholders. Now I'll proceed to the multiple choice problems. First, we have 18-13, and in 18-13, what amount should be reported as book value per ordinary share? So in number 13, our answer is 70. The total shareholders equity of 10,250 by adding all the figures given. And we have now the preference shareholders equity, the preference capital of 2.5 million. Then we have the dividends in arrears given 250,000, and the liquidation premium given at 500,000. Now, if the entity were to be liquidated, the preference shareholders would receive par value plus a premium of 500,000. So it's called liquidation premium. total of 3,250,000 for the preference shareholders equity. For the ordinary, it's 7 million. Divide by the ordinary shares outstanding of 100,000. That's taken by, anyway, we have the par of 35. 3.5 million divided by 35, and you are given the 100,000 ordinary shares. The book value per ordinary share is 70. Next, number 14. What is the amount to be reported as book value per preference share? So we have now the capital of the preference shares of 1 million. The liquidation premium is the excess of the liquidation value over par. So for 20,000 shares, we multiply by 5. If the preference share has a liquidating value of 55, so and the par is 50, meaning a liquidation premium equal to 5 pesos multiplied by 20,000 preference shares or 100,000. The preferred dividend for current year only is 1 million. Now, dividends on preference share have not been paid since 2018. But for purposes of determining the book value per share, and since our preference share capital here, we have 1 million. So we now get the preference dividend for current year only, multiplying 1 million by 12%. So that's the preference shares, though no amount of dividends have been paid since 2018. So we now have 120,000. The total preference shareholders equity, 1,220,000 divided by the number of preference shares in the amount of a number of preference shares outstanding of 20,000. The book value per preference share is 61 pesos. Now that's letter A for 18-14. Now we go to 18-15. What amount should be reported as book value per ordinary share? Total shareholders equity of 3.9 million by adding the given figures. Preference shareholders equity is the capital of 1 million, then preference dividends equal to 1 million multiplied by 8% times 2. Now we get the amount of 160,000. Since the preference dividends are considered to be cumulative, and dividends on preference shares have been paid through 2019 but have not been declared for 2020 and 2021. Now for number 15, we have the preference dividends, 1 million multiplied by 8% times 2, and the liquidation premium equal to 5 for a total of 1,260,000. So the ordinary shareholders equity of 2,640,000 for 100,000 shares. So the book value per ordinary share of 26.40. Now the answer is letter C. Then number 16, question, what amount should be reported as book value per ordinary share? Now for number 16, total shareholders equity, adding the figures of 950,000. Deduct the preference share capital of 1 million and the liquidation premium equal to 105 minus 100 is 5 multiplied by number of shares 10,000. So total of the preference shareholders equity deduct from the total shareholders equity 3.9 million is the ordinary shareholders equity. Divide by the ordinary shares outstanding of 30,000 taken by dividing 3 million by 100 par. So the book value per ordinary share of 130, letter B. Then we go to number 17. And the requirement is what amount should be reported as book value per ordinary share. Now, for the total in number 17 of the total shareholders equity of 1,608,000, deduct the preference share capital of 500,000 and the dividend equal to 500,000 times 8%. Dividends on preference shares are in arrears only for the current year. So total of preference shareholders equity 540,000, leaving the ordinary shareholders equity of 1,068,000 divide by the number of ordinary shares. That's 89,000. The book value per ordinary share is 12. Now the ordinary share capital of 90,000 with a par of 10. So that means total of the entity reported the shareholders equity at year end for the ordinary share capital of 900,000 divided by 10 per share or 90,000 shares minus the treasury shares of 1,000. The number of outstanding shares for ordinary is 89,000. So dividing the ordinary shareholders equity of 1,068,000 by the outstanding ordinary shares of 89,000, the book value per ordinary share is 12. Then we have number 18. Question, what amount should be reported as book value of an ordinary share? For the total equity of 1,910,000, deduct the preference share capital of 500,000 and the preference dividends for 2 years for 80,000. And so we have the difference of 1,330,000 for the ordinary shareholders equity. And the shares issued for the ordinary shares is 11,000 divided by in treasury of 1,000. So ordinary shares outstanding of 10,000, leaving the book value per ordinary share of 133 pesos. Next, number 19. What amount should be reported as book value per ordinary share? Now, for the balances, initially, we have your preference capital of 2 million and the ordinary capital of 3 million. Here, we have preference share 12%, 2 million, 14%, 3 million, ordinary of 5 million. So the excess is the sum of 2,240,000 and 1,500,000. First, we give 2 million times 12% times 3 years. That's now on your 12% preference share with 20,000 shares with 100 par value. The 12% preference share is cumulative and fully participating. So for the 14% preference share is non-cumulative and fully participating. Dividends have not been paid for 3 years. Since the 12% preference share is cumulative, so we multiply 2 million by 12% by 3 years or 720,000. We deduct from excess, we add to preference shares. For 14% preference shares, it's non-cumulative, so we only have 1 year or 420,000 add to preference shares. And 12% multiplied by the ordinary shareholders' equity par of 5 million times 1 year, 600,000. And we have now the balance of prorating. The balance of 2 million. 2 million is taken by deducting from 3,740,000 the amounts of 720,000, 420,000, and 600,000. Now we prorate and for the 12% preference share, we have 2 over 10. That's 2 divided by 10 or 2 million divided by 10 million, the total of share capital. And for 14% preference shares, 600,000, and for ordinary, for 1 million. So we have the excess equal to 2 million, and now we are prorating by adding to the 3 columns and the totals divide by the shares outstanding. For the preference shares, 12%, 20,000 shares outstanding, 10,000 for the 14% preference shares, and 50,000 for the ordinary, ending at the book values per share of 156, 420, and 132. But the problem is asking only for the book value per share on the ordinary share capital. Then we have a problem 20 for determination of the book value per ordinary shares. So the preference share capital of 2 million, the ordinary share capital of 4 million. Then we add subscribe ordinary share capital of 2 million, share premium of 1 million, and we have retained earnings of 2.4 million. We deduct 800,000, the treasury shares, leaving the net equity of 10.6 million. Preference shareholders equity deduct the share capital of 2 million and the preference dividend for 3 years, 2 million multiplied by the rate of 10% times 3 years. The preference dividends are in arrears for 3 years. 600,000. Deduct 2.6 million from 10.6 million. The ordinary shareholders' equity is 8 million. For book value purposes, the subscription receivable is not deducted from subscribed share capital in determining the total shareholders' equity. So the ordinary shares issued is 40,000. Then we add subscribe of 20,000 deduct the treasury shares of 10,000, the outstanding ordinary shares. These are the shares presently in the hands of the shareholders for 50,000, and divide 8 million, the ordinary shareholders equity divided by the outstanding shares. So the book value per ordinary share is 160 for 8-20. That's letter C. Next, we go to number 21. Again, for number 21, what amount should be reported as book value per ordinary share? So in number 21, we have now the book value per ordinary share in question. Number 1, the answer is A. And question number 2, the answer is B. That's now for problem number 21. Now I will share screen the solutions to the remaining problems and the multiple choice, so I can proceed to chapter 19 for problems related to the chapter contents. We have your earnings per share. So take note, you already have all your solutions for chapter 18. Now we go to chapter 19. In chapter 19, the reporters discuss 19-1, 19-2, and 19-3. So I will be discussing the multiple choice questions, including the rest, no? If I have to discuss up to 10 o'clock. So after that, I will just share screen the remainder so as to give time to the reporters to report chapter 20. Now, the next multiple choice problem is 19-9, asking for the amount to be reported as basic earnings per share. So for the net income of 750,000, then we deduct the preference dividend of 120,000 given the problem, net income to ordinary share. So the basic EPS is 630,000 divided by the outstanding ordinary shares, now giving us the basic EPS of 10.50, letter A. Next, 19-10. For the question here is still the basic earnings per share. So ordinary shares, January 1, 2021 for 200,000, then the share dividend on October 1, 2021, 10% multiplied by 200,000 or 20,000. So the total ordinary shares outstanding is 220,000. Now take note, what was declared on October 1, 2021 was a share dividend. So that increased the number of outstanding ordinary shares. For the net income to be deducted is the preference dividend given at 200,000. So the net income to ordinary shares is the balance, 1,720,000 divided by 220 ordinary shares. The basic EPS is 7.82. Next, number 11, still what amount should be reported as basic earnings per share. Now for number 11, the ordinary shares outstanding is 1 million divided by 5, giving 200,000. So the basic earnings per share is 4,300,000 divided by 200,000 shares. We get 21.50. The preference dividend is ignored because the preference shares are redeemable, and therefore the preference dividend of 500,000 is already deducted from the net income as a finance cost. So that it means that the net income of 400 or 4,300,000 was after deducting the finance cost. Answer to number 11 is letter A. Number 12, question, what will be reported as basic earnings per share? Net income of 5 million. Deduct the preference dividend for 1 year, 2.5 million multiplied by 4%, 100,000. Net income to ordinary share is 4.9 million. 4.9 million divided by 200,000 shares outstanding. So the basic EPS of 24.50. Next in number 13, question is in the computation of basic earnings per share, what amount should be used as earnings? So for computing in the absence of any contrary statement, the preference share is non-cumulative. Accordingly, the annual preference dividend is not deducted from net income because there is no declaration. The fact that the preference share is non-cumulative and there is no declaration. So the basic EPS should be 1,800,000. Now for the amount of 20 or for the number of 20,000 ordinary shares for 9. So 1.8 million divided by 20,000 ordinary shares. We have the amount of 9. That's your book value per share, or the EPS, I mean, per share. But the question in number 13 is, in the computation of basic earnings per share, what amount should be reported as earnings? So we have 1,800,000. Next, number 14, what amount should be reported as basic earnings per share? Ordinary shares issued 30 million divided by 100. So 300,000. We deduct the treasury shares of 50,000. The ordinary shares outstanding of 250,000. The net income is 5 million or 15 million for the net income for with an income tax rate. So the company reported net income of 15 million for the current year. So net income number 14 is 15 million. Deduct the preference dividend equal to 10% of 5 million. So we have the amount of 5 million times 10% is 500,000. Net income to ordinary share is 14.5 million. And net income divided by the number of ordinary shares. So the basic EPS is 58 for number 14. Next, number 15. What amount should be reported as basic earnings per share for the current year? And we have now 7.1 million divided by 400,000. The 400,000 ordinary shares. So that gives us 17.75. Number 16, what in number 1, what amount should be reported as basic EPS for 2022 in the comparative income statement? So for number 16, requirement number 1, January 1, 2022, we have 240,000 shares. We multiply by 12 over 12. That's on January 1 and 2022. April 1, we have 40,000 shares times 2 times 9 over 12. So the average number of shares is 300,000. Then the EPS equal to 6 million divided by 300,000. The EPS is letter B. And question number 2, the answer is still letter B, or 15 dividing 3.6 million by 240,000. Now, i-share screen ang number 17. Actually, we have the rest. 17, 18, 19. So we have to share screen. I hope you will study the solutions to the problems up to number 26, 27, 28, 29, and 30, and 31 for the multiple choice problems. So that's all for the problems in the previous chapters. Now we are going to begin with the reports of